Well, good morning. If you can hear me, let me know real quick. Get things all situated here real fast, as fast as I can. Let's see. Oh yeah, good afternoon. That's right. So I forget. Get stuck in my own mind. It's only 9 o'clock out here on the West Coast. So hopefully you can hear me good. Okay, good. That's good to hear. Thank you, Andrew. Because I've got a video rendering right now and it takes up a lot of CPU. So everything else, I shut all my software down, hoping it would finish by the time we got started here, and it's close. It's got like 3% left, so it should be done pretty quickly here. So, like I said, if I didn't know it was going to take this long, it's been going for 3.5 hours. I didn't think it would take that long, but about a half hour ago, I just shut everything down so it had all my computing power to hopefully finish before we got started. But I'll get through all the upcoming events and all that stuff first, and hopefully that'll be done. And I'll fire everything back up, and we'll be off and playing. So, but let's do the disclaimer, get it out of the way. I am not a registered broker or investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. So all the stuff that is coming up, inner circle is the 18th. My screen is not shared. Really? Oh, it show on my end. It shows that it is. Have I lost my mind? You see, get that out of the way there. Put that up there so I can see where it's at. Okay, good. Thank you, Steve. Steve's seen it. So, Andrew, you lost your mind. I don't know what's going on with it. Okay, good. This is Andrew, right? Have I lost my mind? Okay, that's what I thought. Like, oh, okay, good, good, good. Thank you. So yeah, inner circle, 18th and 25th at 7, and then the monthly is the 21st. Fibonacci Trading Mastery Live, November 18th, 22nd, and December 2nd. It's crazy to believe we're seeing December already on here. It's Christmas time. Thanksgiving's what, 2 weeks away? I don't even know. I better go get a turkey. Okay, good, Andrew. Do you open your eyes? Patterson Flash with yours truly, November 20th. And then the free online workshops, Power Hour every Monday at noon. And this one, Trading Coaches Playbook, every Friday at noon as well, Eastern Time. And of course, you got Power Option Plays Monday and Thursday with Trip. Cover call, or that's with Rob. Cover Call Explorer with Trip on Thursday. And then E-mini Think Tank Monday, Wednesday, and Thursday with Brandon. So, yeah, was there a glitch in getting things coming in here? Because usually there's a lot more people here. So, or is it just that time of year where people are busy doing other stuff? So, a bunch of people are popping in right now. So, got 1.5% to go. It's almost there. But if it's not slowing down for you guys, that's good. But I know that when this thing's running, my extreme charts, my toss, everything just moving around trying to click on things, it takes 3 to 5 seconds to pop up. So it's really kind of irritating that it bogs it down so badly, but it's really close to being finished. So we'll go through the PowerPoint section of my what we're going to talk about today, and then it'll be done for sure by then. It should be about 5 minutes, and it should be done. So, but you can find us on all the social media places, and then if we haven't met, those are the three tools I have. Well, and Trade Watch Alerts, probably should add that to this since Amelia decided to finally fully retire and not play with us anymore. But no, I took over the Trade Watch Alerts for her, so which is fun. I'm having a good time with it. So, except right now. Well, one's upside down, two are doing well. So net we're profitable for the day. Same thing yesterday. Had two winners. Well, one winner, one loser, and one basically break even. But net we were up 5% for the day. So, and I don't know where we're at today. We'll probably end up about the same today if things keep going the way they're going. So, but Patterns and Flash is a tool I created. Actually, man, it was 2010 we originally launched it, so it's been almost 15 years. But if you need uh, if you need to up your technical analysis skill, and that's a tool you might want to look at. Weekly Whispers is basically just my weekly analysis, trades that I'm looking for. We started that a year and well, almost 2 years ago. I guess it was beginning of January of last year, not this year. But um, I said to Rob, is that I'm already doing all my research. All I have to do is record it. I mean, just verbally explain what it is that I'm looking at, what I'm watching, why I'm doing it, and then here's your candidates, your 20 or 30 candidates for the week, and that's what I'm trading. That's what I do every week. Every Thursday, I go do my research. I flip through 300 to 400 charts, looking for patterns. I narrow it down. It's just like a funnel, right? You start off with this big amount, and you just whittle it down to you get the candidates you want, the best of the best. So it takes 2 hours is a light week if there's not a whole lot of candidates, and 4 hours is a long week. So it's usually about 3 hours to get all my research done and all my trading candidates laid out and ready for the week. So, and that's all I watch for the week. I don't hunt every single day. I used to, but it's just too time intensive. So, and once a week's enough anyway. And I'm typically getting anywhere from 1 to 5 trades will trigger. If things really move big, then 5 or 10 might trigger. So it's a really simple laid back way to do your research and trade and not be constantly watching things on edge. Even though I do, but at the same time, I don't have to. I can walk away if I want to. And a small account, big returns, that is the one I pre-recorded a couple of years ago. It's all about starting with a smaller account. If you work with a smaller amount of money, some different tips and tricks to hopefully grow it to where it's not a small account anymore, right? That's the goal. So we're going to talk today about being a contrarian. And I found it really, really interesting that when you Google contrarian and you look up the definition, a person who opposes or rejects popular opinion, especially in stock exchange dealing. And the Webster, I looked at the Webster dictionary definition too, and it said something similar. So it's interesting how the term contrarian has pretty much been attached to the market and to trading by major definition books, right? Webster, and I don't know what else there is out there. Merriam-Webster merged, so it's Merriam-Webster, whatever it is. But yeah, they all refer to. I looked at 3 different definitions, and every single one of them referred to the market and trading. It's become fashionable to become a stock market contrarian, and I've always kind of had the contrarian mindset. It's I think I don't know if I'd say it's in my nature, but it kind of is. I've never been one to really go with the crowd, trying to be popular and fit in. I've always been, I don't know if I'd say I'm a rebel, but a little bit. I definitely rebel against the norm, which is contrarian. And the fact that you're here, hey, Brenda, trading the markets on a short term basis like we do is pretty contrarian. The vast majority of people don't trade. They don't want to trade. They don't like to trade. They don't want to be involved in it every single day. Very, very few people are actively trading like we are. So just the fact that you're here learning to trade and actively trading, probably some of you might be brand new. I don't know. But the fact that you're here is pretty contrarian. And if you get into options trading, there's a lot of people out there that are scared to death of options trading because they don't understand. Uh, sorry, the cat is moving the camera. She's back behind my screen, right behind the camera, and she's pushing it with her paw. I don't know if you saw it move or not, but what a goofball. Anyway, I, I was running her earlier. She thinks she's the dog. She plays fetch. So I was trying to wear her out so she would leave me alone when I was here. But obviously I didn't I didn't do enough of that. So she wants more attention. Where was I before the crazy cat and my ADD kicked in? Uh, I don't remember. But being contrarian is trading options. It's I think it's funny actually because people say, well, options trading is risky. Is it? It's like saying, go to the grocery store is risky because there's all kinds of things in the freezer, in the fridge that are cold that have an expiration date. And if you buy it and you don't use it by the expiration date, guess what? It's probably going to go bad. I bought a milk. I have a gallon of milk in my fridge right now that's expired 5 days ago. I don't know if it's bad or not. I'm going to open it up and find out. If it's not, I'm going to use it. If it is bad, then my option expired because I didn't use it in time. Uh, so, it is what it is. It's no different than that. All you have to do is, okay, how long do I need for things to maybe do what I think they will? If I'm buying a stock or buying an option on a stock, how long do I think it might take? If it's going to take a week to move to the target, great. I'll buy 3 or 4 weeks of time. I'll make sure my expiration is far enough out to not have it go to waste. So, but Buffett, this is one thing people love to point to Buffett. So I'm a little bit hesitant to point to Buffett because they often speak of him from it, and I don't know if I want to say it's an ignorant point of view, but it's not in the full context of who Buffett really is as far as an investor. So he's a buy and hold guy. Well, kind of. If he is, then why has he sold 75% of his Apple stake in the last few months? Why has he sold huge, I don't know what percentage, but I mean, a couple months ago, he sold half his Apple stake. That was reported in the last quarterly deal. And then it was reported recently that he sold another 25% of it, half of what he had left. Bank of America. Yeah, exactly. I don't know how big of a stake he sold in that, but it was a huge chunk. I think I heard something like 2/3 or something, but whatever it is. And he's got, I mean, just 2 or 3 months ago, I heard he had 200 billion, 180 or $200 billion of cash. He'd sold all this stock and raised all this cash. And last I heard, I think it was last week or the week before, it was 300 billion. I mean, he's selling in droves. He's selling off his stock like nobody's business. I just heard something go off. Oh, that's the loser of the day. That's all right. It's a smaller loss. I know my luck is going to take off and bolt to the upside. It's a frustrating part, but at the same time, it's trading. But I also hit some on spot on J&J too, where it nailed. I hit literally to the penny. Second time in almost 25 years, I hit on the penny. It triggered my trade, and then it turned and went the other way. It was cool. I get a little excited about cheesy things like that. But back to Buffett. Uh, so yeah, he is not really technically a buy and hold kind of guy, even though he is. He buys companies. He's looking for companies that have cash flow or pay dividends. Right? He's huge in the insurance business. He basically buys businesses. He doesn't necessarily buy stock like you and I do. He's not looking to buy a little tiny piece of the company. He doesn't want 1,000 shares of Microsoft. He wants 10% of Microsoft, or whatever the number is. Right? He's literally buying chunks of company, controlling stakes in companies. So if you think he doesn't have some kind of special dividends behind the scenes that we don't know about, he most likely does. He gets A shares or whatever the different class of shares that are not the same as the ones you and I buy. But one of the reasons that Buffett has had massive returns over the years is because he has stayed out of the way of bear markets. He knows when the market is overvalued, and he's willing to sell into that strength. He's willing to sell it when it's overvalued and take his money off the table and wait for it to come back to reality, because the market gets overvalued and undervalued very easily. Maybe not easily, but from a long-term perspective, it does it quite often. And in the late 90s, when the tech boom was going, everybody was talking about what an idiot he was, calling him a moron. He's so stupid. He's missing out on the greatest boom in history, blah, 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 blah. And I think it was in like 97, 98 is when he started selling off a lot of his holdings. He was 1 or 2 or 3 years early. Just like what's his name? Michael Burry. He started calling for a housing crash in something like 05 or 06 is originally when he started talking about it. And when you go back, he didn't see it publicly, but he was making calls saying that this housing market is insane, it's overvalued, it's going to crash. It might have been '07, but it was quite a while before it actually took place. But then guess what happened after the 2000 crash? All of a sudden, Buffett was a genius again. Because not only did he stay out of the way, but his wealth actually grew by a tremendous amount. Because he has the ability to recognize from a long-term perspective when the market is it's in its irrational exuberant state, right? When it's euphoric, when the market is all excited and things are going to the moon, Greenspan coined irrational exuberance, which is what we had in 2000, and the bubble burst. There's the old saying, I think it was JP Morgan that said it, if I remember right, buy when there's blood in the streets. So when you can learn to recognize these two different areas of where the market's at, and right now we're talking long-term macro picture, right? Not micro. As traders, at least I trade short term. I don't have but a 2 or 3 longer term holdings. I don't want to be in long term necessarily because we don't know when something crazy is going to happen. So I just trade short term. And there's lots of arguments to be made for that. Some people like to day trade because they don't want to have overnight exposure. The shorter time frame you squeeze it into, the more difficult it becomes. Let's put it that way. That's the easiest way to explain it. So if you day trade, it's brutally difficult. Very, very few people make it day trading because of just of the nature of not only the emotional part of the market, but when you squeeze it into a very short time frame, it becomes more difficult. I mean, you buy a stock today and it goes up 20 years from now. That's especially if it's if it's a solid company, that's not that hard to do, right? You need something to go up in 2 years. That's a little more challenging. You need something to go your direction the way you want it to in 2 months, 2 weeks, 2 days. You see what I'm saying, right? So the shorter time frame you try to trade in, the more difficult it is. But from a big picture perspective, when the market's all excited, and we're kind of in that phase right now where the market is, especially after the election, as you all saw what happened after the election, markets just went crazy. Because, it was, I think that most likely the policies the changes that we'll get will help the economy. The question becomes when. I don't know that short term is going to do a lot. In fact, there will probably be more short term pain before there's a long term change. That's what I suspect is going to happen. There's still the underlying storms are still there. Just because there's a new leader coming in doesn't mean it's going to change on a dime. And those things that are underlying that are a problem underneath the surface still have to be dealt with. So we'll see how it goes. But I mean, nobody knows, obviously. I wish we all had a crystal ball, but so here's some ways to tell when to be a contrarian. Okay. This is where it gets a little bit fun, right? News outlets, when the mainstream news that doesn't report on the market starts reporting on the market, that's usually a sign that the rally is coming to an end. Magazines, right? This is old school stuff, right? If Cosmopolitan, I don't know, there's probably not many of you in here that read that. I know my ex get it when we were young, but I mean, it's a magazine for chicks. And when they start talking about the market, you see articles in magazines that don't report on the stock market normally. Yeah. When you have coworkers that don't know anything about the market, they start telling you all about, the stocks they bought, this and that, the shoe shine boys. In fact, there's the story. Who was that? I think I remember a few months ago, I ran into this. I found some documentary about this guy, Pinkerton. I think his name was Pinkerton. He's been dubbed one of the greatest traders ever. And at like 13 or 15 or something like that, he was shining shoes. And some guy gave him some advice or something like that. He ended up going down and lying, and he went to work for JP Morgan. This was back in like the early 1900s, 1913 or something like that. And he ended up at like 13 or 15 years old getting a job as a runner or something like that for JP Morgan or at the market, or I can't remember all the details of it, and he got some advice from some great people. And at like 16 or 17 years old, he made like $1 million trading. he saved up his money shining shoes. And he learned that when the shoe shine boys start telling you what to do, that's, when the average Joe walking down the street is telling you what to trade or what to invest in, it's a scary proposition, right? So those are kind of some of the things. My neighbor, as much as I love him, he's like, when Trump won, he's like, I'm gonna max out my 401k. I'm like, eh. I didn't say anything. I'm like, I don't make a habit of saying stuff like that, even though he knows what I know. But I'm like, I wouldn't do that yet. But then again, I've been wrong before too, so things might just keep going crazy. So, in fact, we'll look at that in just a minute. Let me close that down. Let me get that going real quick. Get that back up and active. But mean reversion. This is, if you're not familiar with it, where stocks get too far away from the mean, whether it's up or down, they almost always come back to the mean. In fact, I've got a mean reversion line on the SPX, so we'll go look at that. But that is the way a lot of people trade, and a lot of day traders trade that way too. And you can, and there's a lot of systems builders out there that will build a system based on mean reversion, and they might take a moving average and say, give me the 8 exponential moving average. If the stock gets, and you can go back test all this stuff, right? If you have a system to do this with, you can go back test and say, okay, if this particular stock gets 12% away from the 8 exponential moving average, it retraces 6% within 45 minutes if it hits this number, right? This is what a lot of the trading systems do that are computerized. They go and run algorithms to say how far away from this point does it get, and then how far does it retrace? And then they build a system on that that says when it gets to this point, it's an automated trading system that says, okay, take this stock, take B of A. So I'm looking at Jennifer. B of A is at $32. If it gets 12% away from the 8 exponential moving average, then short the stock and then buy it back at 6% or buy it back at the moving average. There's lots of black box systems that do that. Those that build trading systems like that that's essentially what a lot of them do is mean reversion trading. When things get exhausted too far away, then they revert back to the mean. One of the best ways, in my opinion, is patterns. Patterns will show up in charts and it will tell us when things are tired, when the sellers are tired, when the bears are tired, or when the bulls are tired and the market's a little overheated or maybe a little oversold. One of my favorites, as some of you know, is the head and shoulders. And when you look at the actual pattern itself, excuse me, it is a perfect indication of a stock or a market, depending on what you're looking at, obviously, of exhaustion setting in. I don't know why I was thinking of this morning, but when I was a young man and I used to go skiing quite a bit, you get up to the mountain, you're all jazzed up. It's the beginning of the day. You've had a good night's rest. You're excited about the day of skiing. You're going to have a good time. All kinds of energy, right? You hit the slopes just hard. And then you start to get a little tired. You've been skiing for 2 or 3 hours, so let's take a lunch break. So you go rest, you refuel, then you go back out and you hit it hard again. Like, woo! And then after a couple more hours, you still got 2 or 3 hours left of the day, but you start to get tired again. You're wearing out, right? So maybe you take a short break, take a 20-minute break, sit down, maybe have a snack. And then the third run out there, you go out and you still have an hour left before the day's out, but you start to get tired. It's like, whoo, I'm worn out. You know what? I'm going to pack it in. We're not going to keep going all day. We can't keep skiing all day. We're going to get too tired, so we're going to stop and go home. And that is essentially, I don't know, maybe somebody else saw it. If you're familiar with the head and shoulders, that was my weird mindset way of looking at head and shoulders and how it works. For some reason, my mind went down skiing. And let me show you real quick because I think it'll make more sense if we look visually at it. Because there are quite a few head and shoulders going right now with, I mean, I think this is the list from this week. There's 20, and I think, oh, interesting. Oh, that's kind of cool. I know Zoom just did this upgrade and they've changed some things up, but I just noticed the little annotate thing in the corner, which is kind of nice. So there's the head and shoulders, right? Going back to the skiing thing, right? This right here is morning time. In fact, I'm going to use that right now since I'm here. This is the morning time. You're all excited. You're jazzed up. You know, you're just hitting the slopes. You're having a good time. You're going, woo. And then it gets lunchtime. Here's lunchtime. I need a break. I need to refuel. So you take a rest, right? You sit down for an hour. You have a hot cup of coffee, maybe a little hot chocolate when we were kids. I didn't like coffee at the time. Have some food, refuel. And then you come back, oh, let's go skiing again. Woo, you're hitting it hard, having a good time. And then it's like, you know, after a couple more hours, you know, you used up most of your energy here, but you got to boost after lunch, after your rest. And so you're just hitting it hard. And then you're like, oh, I need another break. So you take another breather, maybe refuel, get a little rest up. Then you come out trying to finish the day off strong, but before 4 o'clock hits, before the lifts close, you peter out. It's only 3 o'clock. Lifts close in an hour, but you peter out and can't. I'm just too tired. I can't keep going. So you pack it in and head home. I know it's weird. I even thought that this morning. I'm like, why did I think of this? It's kind of crazy. But if you ever skied, you know what I mean, right? You get tired by the end of the day. And then get into the realm of trading. Hopefully it crashes, right? Hopefully you don't crash your car on the way home if you're too tired. But hopefully the stock crashes and you can take advantage of it, right? That's what we're looking for when it comes to trading. Let me show you. Well, and this is one that just played out. J&J, this thing's beautiful. Head and shoulders, breaks the neckline, drops off, and just sells off. We get a little gap down. Let me zoom way in. Right, we break the neckline there. We tap it for a few days in a row and then sell off there. Rally back up. We actually tapped it again here and then sold off again. And the measured move of 912, holy cow, that's what it's doing today. Good thing I got out a couple days ago. This is the one this is one of the best trades I've had all year, hands down. Just as far as timing. And it was, part of it's just dumb luck. Some of it's skill, some of it's luck. But this is the beauty of patterns. You got the measured move, 912, basically $9, $9.50, and that's exactly what it did. It played out perfectly. So that is one of the reasons I love patterns, because this is, well, it doesn't happen 100% of the time, but it is pretty common. So, and there's quite a few this week. There's one right there, an ARM, ABGO. Holy cow. Broadcom's hitting it. You know what? I don't think I had an order to hit that, did we? All right. We're going to sell it. We're just going to do 400. Because that is there. This is, if you don't use Omega charts, this is one of the beauties of it, is you can have this practice system in here playing out. And we got the head and shoulders. You can keep notes in here. I'm not going to put anything on that one. And then attach a snapshot of the chart, hit OK. And that'll save a snapshot of the chart just the way you see it here in your journal. I almost put an order on this the first thing this morning. I thought, it probably won't hit there. I'll keep an eye on it. But, man, it's just getting blitzed. Let me see. Come on. I'll get my toss back up and running. Okay, good. Oh, come on. Maybe my password for you all to see. Let me get that out of there. There we go. Let me close that off. But wow, I didn't expect that. I mean, I know things have been getting pretty beat down. pretty beat down with a lot of the tech stuff's gotten beat down pretty heavy. So, but yeah, this is it's a little early sometimes to jump on it. That's why I pared down the size because we've already got 4 or 5 big days down. So I don't want to go too heavy on it if it does retrace. We're aware. There we go. Okay. Let me get the chat back up. Interesting. There's some double tops. There's quite a few reversal patterns this week. There's a few little bullish ones, but Edison is a nice little descending triangle, another double top. It's kind of a triple bottom, but I don't know if I had one. I didn't have one out on this. You know what? We're going to do one more. You guys don't mind, do you, if I'm playing around? I love Microsoft. So irritated at these. I want that menu bar at the bottom. I want to be down, gone, and it doesn't disappear, and it drives me bonkers. And they change it. They do an update, and it changes it. I have to go back in here and change it. Anybody here work for Microsoft can yell at somebody because it's ridiculous. Trying to keep the real estate there, and it keeps coming back up and just bugs me to no end. Anyway, all right. Try to let my frustration go. Seems like 3 times this week I've had to do that. So, but LRCX, I just noticed it. I think I can't change that without that. This is a descending triangle. About that, you can put a bunch of information. You can write all your notes and stuff and what you think there if you want. And that's the part that irritates me is I have to keep adjusting these stupid things because that dumb bar doesn't stay where it's supposed to. So I don't like having to adjust things every half a day. Medtronic, Meta. There's a nice little triple top going on Meta. It's looking better. Inverted head and shoulders on OVV. It's a nice pattern. Beautiful. There's the opposite of the head and shoulders, right? Raw stores, Raytheon. There's a beautiful head and shoulders on Raytheon. I was going to show you the SPX. That's what I was thinking of. STX, that's a nice head and shoulders that hopefully will keep on tanking. But I wanted to look at the mean reversion. Where do we go? Top down. There we go. This is something that's really interesting to me. And when I looked at it this morning, I went, whoa, get rid of that. Or yes, last night I was looking at it. So there is a tool inside Omega charts, and it looks like this. It's a regression line, right? Mean reversion, regression is basically the same thing. Um, that'll help. Use the small ones, whatever. So irritating. I don't know why this Zoom thing just went super big. The top thing did, but oh well. How do you draw it? Let me show you. Let me try to get rid of all this stuff here. So there's the interesting part. Oh, interesting. So there's a daily actually. That's March 2020. So that's about 3.5, 4.5 years, whatever it is. So on the daily, you can see we're actually at the top of the line. So what I did with this, let me go back all the way. This is the entire history. In fact, that's not right. You got to go semi-log. We got to logarithmic scale. Excuse me. So if you get the regression line on here, right, you can't see that, but that's what it looks like in the toolbar. Then you start at one point and you draw it and you drop it at another point. And what it does is take all the data points from every single day that you draw, from the day you draw to the other day you draw, and it creates the mean. In fact, we'll take that off and we'll just start over. So I'm going to go back to the very beginning right here where the SPX started in 28. Left click there and drag it and go all the way up to where we're at today. And the line doesn't go where the end is, what you're used to. So you got to take the pencil and you see I'm going right to the top there. It's basically 6,000. Let me move it up just because I know there we go, right about there. I'm trying to get it. Now I'm being OCD, which is, there we go, close enough. So what it is, it takes the data points, the close of every single day from that part, basically 1928, early 28 to right now. And that middle line is the mean. So it does all the math, calculates it all. You want to do this on a logarithmic chart. You'll notice that the scaling is different. If you do it, watch this. If we get rid of the logarithmic, see how crazy it looks? It's totally whacked out. So this is all scaled statically. It's the same 500 points per deal. Logarithmic will do it on a percentage basis, which over a long period of time is the best way to do it because, a 1% move in the market now is very different than 1% move market was back here when the SPX was at 16 or 15, the 1% move was 15 cents. It's not, compared to now, 15 cents is not even, that's like a doji day, right? We're at 243 points in the monthly chart, but this month is up 243. A 1% move now is 60 points versus 15 cents, 100 years ago, whatever it was. So make it on long-term charts, you want to make it logarithmic if you're doing long-term analysis like this. But what you can see is that those upper lines and the lower lines are the outskirts, essentially. That's where they, when they get to that point, they're essentially oversold. And you can see how well it tracks that. You go back historically, you see that you got the 29 crash, of course, which goes right through the mean line, but then it reverts back to the mean. And then here it gets pretty overheated in the 30s, gets up not that far away from the line up top, and then comes back down to the bottom line. It gets so far away from the mean that it finally retraces. So this is something that can work really good. And that's why I'm bringing this up in the contrarian part, because when things get out here, way out here to the mean or to the extremes, that's when you do something different. Obviously, if it's down here, you might look at buying. If it gets up here, this is the 2000 run, right? You can see how from you had the Great Depression right in here, and things rallied in the 40s, got back up to the mean and just kind of danced along that line and just kept on trucking. And then in the 60s and 70s, the market went sideways. In fact, there's the crash, in 72, 74. It came down and hit the bottom line in 74 and then started rallying. And it stayed down in that lower end of the range, but then it really took off. But then it stuck really tight to the mean line there. And there's, here's the 90s. There's the dot-com era. For 5 years, it just went raging north. And it got way too far away from the mean. And what did it do? It came right back to it. 2008 crash right here. It didn't get way out of the mean, but it did crash because of other things. But then once it got down so far, down near the bottom end of the mean. So if you have a contrarian point of view and you wait for the markets to get to these areas, here's where I thought it was really interesting is that, so this is a monthly chart, right? This is the entire history. If you actually scrunch this down, and if we project out, and if this thing was to keep going the way it is, just like we did here in the dot-com area, if it comes up to here in the next few months, that's about 8,000, which I think is crazy, but it's entirely possible. If the irrational exuberance of this market continues to go, then it could. But again, that's a monthly chart. Let's jump to a weekly, and then you'll start to see a little bit of difference. And this is where analyzing different time frames can be a good idea, because monthly looks very different. Now we get to weekly, scrunch it down, and the high end of that, the mean reversion trade, the high end is up here at 6,500. Will it run up and hit that? Who knows? Let's see. Okay, that's as far back as we can go on a weekly. Why is that doing that? Well, you can see in there, the far left there is the 2000 crash, right? Where it just came back to the mean and then rallied back from there. But then the 08 crash was really bad. It got way down here. On a weekly chart, it dropped way below that. Now, if we go to daily, so there's the COVID crash on the left-hand side, but the bounce from there, it took us back to the mean. We settled in, and then we rallied from there and went up to the extreme area, which is a clue, right? If you're a contrarian or if you're playing a little bit longer time frames, and you can use this, of course, on a short time frame. You could put something like this on a 5-minute chart and use it as a way to say, okay, it's too far out away from the extreme. Just like I was talking about the mean reversion traders. The ones that build systems will say, if it gets to this level, if it gets this percentage or to this point, it's gone too far and it's going to revert to the mean most likely. The odds are it's going to do that. So they play the odds. Sure enough, it not only reverts the mean, but it overshoots it and comes back down to the bottom end of the mean and then starts rallying. And so, yeah, on a daily chart, well, that takes us to about 6,500 as well if we go up and get into that area. Which again, none of us have a crystal ball, so we don't know if that's going to happen. But sometimes it's good to, take a peek at this and see what it looks like. So now there's a daily chart that's not just on candlesticks, and it changes the view of it, shows the upper end at 3,500. That's a non-logarithmic. Let's go see if it changes. Yeah, it changes to logarithmic, then there's the mean line right there, all the way down here at 3,800. Where's the lower end? Can we get it? This is getting a little too scrunched, but yeah, it is. But you see what I mean, though, right? That answer your question, Brandon, as far as how to draw it. So again, it's good for macro picture. Okay, good. It's good for macro analysis, looking at the bigger picture of the market, but whether or not it plays out longer term, I mean, you obviously never know. So I still haven't heard any more dings over here. Oh, it's got to be getting close. T-Mobile and CrowdStrike. Those of you have trade watch alerts. Those are pulled the trigger on both of those. And AEM just got beat up on AEM a little bit, but overall the things are good. So any stocks? We got about 15 minutes left. Anything you guys want to look at and analyze? Any questions on the contrarian thing? There's not. I think I pretty much covered everything I thought about. I can try to come up with some other cheesy analysis stories, but baseball's the one I've been going to the last year or two. But wait, I'm going to preempt it, Brenda. The Qs, right? And the spiders. You stopped asking for those. Which these are going to look a lot like the market, except we can get today's data on there. And you can see is it, yeah, the NASDAQ's off 2 points right now, 2 percentage points. The Russell's down one and a third. SPX is down almost 1.5. Dow is actually only let down less than 1 point. Start over here on the Qs. You don't have any stocks you want to look at? Yeah, this is always goofy. I'm gonna take that bottom right there. So he started off with the question. I'm like, we're gonna flip a coin here. He said, I don't know you, but your thoughts. Yeah. My analysis. Yeah, I can analyze things, but I don't know what's gonna happen. Um, obviously none of it, like I said, none of us have a crystal ball, but yeah, Nvidia's got earnings. When is that again? I know saw it the other day. It's the 20th after the market. There was a nice symmetrical triangle in Nvidia, and it didn't go all the way to the target. Not yet. I almost bought puts on Nvidia yesterday, and then I was glad I didn't because it rallied. And by the end of the day, I'm like, I should have bought some when it rallied, but oh well. And then today I'd be happy. But yeah, so there's earnings coming out next week. Um, yeah, earnings making a wild card. Obviously, we don't know what's going to happen. I'm going to take these off. Actually, it's a little cluttered. In fact, we don't need this anymore. I'll leave that on there. But um, yeah, next week, economic news next week is pretty light. There's not really much. There's nothing significant coming out next week. That's one thing when I recorded the weekly whispers, that's one thing I look at is next week's news and what might have an impact on the market. And I was doing that. Actually, I did it early this morning. That's why I was running now. But there's nothing significant next week as far as economic news. But Nvidia will most likely drive the entire tech sector, depending on what they come out and say about the overall market. Um, yeah, typically when the news is light, when there's no economic news, then the bulls are happy. There's nothing to damper their spirits. So I would expect that next week will probably be bullish because there's light news. I mean, CPI and PPI came out this week and they weren't bad, but they weren't good either. It's still showing that inflation is still elevated. So that put a little damper on the market, but not much. I mean, the CPI, the inflation data, the news or the market's kind of like, we've been watching that stuff for a couple of years now, and it's pretty stable, so we don't really care anymore. Now, the question is, um, employment. What do the employment numbers look like? And depending on your perspective, they're really on the surface they look good, but when you really dig into them, they're not very good. So because I mean, most of the employment that's been happening in the last year has been coming from the government. It's not private sector employment. In fact, there's been a net loss of jobs, private sector. So, uh, and that's not necessarily good because that's driving more government spending, which is what is creating the inflation. When you run deficits every single month, you're borrowing money, you're pumping money into the system. That's what creates inflation. Too much money chasing too few goods, and people have too much money in their pockets. Except that's starting to change, and you've got credit cards at all-time highs. People are living on debt because of the inflation. The cost of just their average everyday living has gone up so much that savings are at, I don't think it's all-time lows, but really, really low, relatively speaking. Credit cards are high. People are hurting economically. So I think that's why there's so much excitement around Trump coming in, is because they expect him to change things. I don't think that he's even going to be able to. Depends on what he does and how big of a scalpel or how big of an axe he takes to all the government waste, which it sounds like it's going to be pretty big, which would be enormous for the private sector to get all the wasteful spending out, cut taxes, tariffs, whether they're good or bad. If you cut taxes and add tariffs, it's a net neutral. So it just depends on how you want to look at it. People have all their opinions about tariffs are terrible, they're inflationary, they're this, they're that. Well, okay, so maybe they're inflationary for certain things, but if you get, your taxes get cut and you get $200 a month in your paycheck more, and the tariffs cost you $100 more, you still have $100 a month extra. You still have more money in your pocket to spend on more. So then you go buy more goods that are tariffed. So you know what I mean? It's just one of those things. It's just goofy. Um, I think I found a squirrel or two there, but yeah, it's virtually impossible to say, but I would, yeah, I know. I would expect Nvidia will well, and that's the hard part is you don't know. It's always surprising. And the last couple earnings quarters, the last couple earnings seasons have been really hit and miss. And it's crazy when you flip through as many charts as I do, because every Thursday I go through, I had 411 on the list this week. Usually there's 3 to 350. I made a little adjustment. It gave me a little more. Hey, it was only 5 squirrels. Drop that zero, not 50. Um, but it's crazy in earnings season to see these massive spikes either up or down. It's not really that stable. there's a lot of companies that are getting absolutely crushed and destroyed, and there's other companies that are absolutely tearing it up. And in good economic times, that's not normal. You don't have this massive volatility from one company to the next. I mean, I don't know if there's a way to, I guess, well, let's see. Well, there's an example right there. I mean, Applied Optoelectronics went from 16 to 28. That's 12 points. That's a 75% move. I mean, I'm assuming that's earnings or some kind of news, but I mean, I can just flip through here. There's one right there, ABBV. Well, this is the thing. A lot of the drug companies, the pharmaceutical companies, are getting blitzed right now because of the perception that Trump is going to take an axe to a lot of the pharmaceutical stuff. You know, he just appointed RFK to go to work and get the corruption out of the government, which is sad but true. It's pretty significant. You know, you feed people crappy food and terrible processed stuff, and then here's a pill to fix it. I mean, it's the sad reality of it. There's a lab, Astera Labs. I don't know what these guys do, but I mean, they're pumped. They were $40 just in September, and they just hit 100 like a week ago. I mean, it's just the volatility is just crazy. It's obviously fairly new, but and then there's some, and these are the ones that blow my mind. Alaska Air, 34 to 52 in 4 months. I mean, that's a 60-80% run for an airline. It's kind of unheard of. There's Ally that was their earnings season. They got blitzed a few months ago, a couple months ago. But you can see, and you can see the big giant moves, and some of them are up, some are down. And I mean, this is only 30 stocks, but there's another one right there there's two in a row. APO, Apollo Global Management. I mean, it was $100 just in August, 4 months ago. Now it's up 60%. I mean, are their earnings up 60%? That's what's kind of crazy. This is one that's crazy. Apploven. In January, this thing was $28. It just hit $284. These are the ones just sitting there like, oh, why didn't I buy that? Even in August, it was 75. It's literally up 400% in 4 months. Like, why? And maybe it's justified. Maybe their future earnings are enough to justify a $285, $85 price point. You buy it now at 285, and in 5 years, it's still 285. I mean, I don't know. Are they going to catch up? I don't know. But it just seems, well, there's the opposite right there. There's three in a row, two up, one down big, 68 to 54. So you see what I mean? And there's 417 on this list. And there's a lot, probably 10 to 20% of them are like this, either big down or big up. And you can see this thing's been trending lower for, I mean, 21 is when it peaked out at 180. It's now at $50. Well, that's 130 points. That's down, what, 70%, give or take? That's not a normal market. If the economy is good, then everything is 80% of stocks are going north and 20% are stagnating or going south. And it seems to be more 50-50 or even 60-40. It's just not normal market conditions. It's just wonky. So yeah, I mean, really, it's really a flip of a coin, Jennifer. When it comes to getting back to your NVIDIA question, it's just, I mean, we don't know. That's why if you own the stock, protect yourself. CrowdStrike, 20%. That was a trade watch alert. I want to know where T-Mobile should be hitting any minute. Yeah, it's always 50-50. That's why I kind of rambled on my trade watch alerts about J&J. I'm going to clean that up. Actually, there's too much. I haven't looked at Amazon for a while. We just hit an all-time high on this. Which, I mean, here's another thing. November of 22. So 2 years ago, this thing was $90. It's up over 200% in 2 years. Have Amazon's earnings increased by 200%? Or their future earnings possibly going to go up by 200%? And I guess I'm not a fundamentalist. I don't really look at that. I don't really care. But it's like, is that price really justified? It could be, but what's future earnings look like is the question. So, okay, I do have a few minutes to do that. That's not what I want. I want B. How far back do you want to go is the question. What's going on here? You do the entire history or just recently? All right, I'm not gonna do any more on that. Let's see him. Okay, we'll take from the bottom. We'll do a couple times just out of curiosity. We'll go from the bottom here when it bottomed in November of 22 up to current. So we're gonna do. Brenda wants a regression line on Amazon, so we'll do that right there. So actually, that's a little too cluttered, so I'm gonna delete that. In fact, I'm just gonna get rid of that too. So there's Amazon and a mean regression line again from the bottom here to today, basically, or at least as close to today as I get. And you can see, I mean, this is where it's a pretty good measure, and you can tell a lot of times where it's at. So if Amazon comes back down here, and there's that trend line I had on here. I guess when we get closer in, it's not quite as cluttered, but which actually right now is coming in. Well, I guess it's not. I don't know why these things jump a little bit, but so yeah, if Amazon gets down here to, well, that trend line's about 195, but if it breaks that and gets down to 185, 190 to that lower line, there may be an opportunity to retrace. But then again, there's the tricky part is that what if it doesn't? It just blitzes right through because that can happen as well. Let's just out of curiosity. Let's just do a weekly. We'll take, what is that? That should be about the entire 2001. We'll take from that and go all the way up to today. See, just out of curiosity, what it looks like. Now that gets interesting. So that's a weekly chart. Started back there at the bottom of '01, which would have been the bottom of the crash. And it's not even up where, I mean, it's not even at the mean on the upper end. It's below the mean, actually. See, that's where it gets interesting. That's why it's hard to use it to a certain degree unless you find a specific time frame. You have to adapt it to your trading style. You can't just throw it on a whole bunch of different arenas and go like, oh, and it all depends on where you start, right? We get rid of that, we do it again. And let's say we start from, well, this is the housing crash of '08. Start from the bottom there, and it completely changes the way it looks. So it's all relative, right? It's like most things in trading. It's all about putting it in context and relativity and where you actually started from. So because people are like, oh, Bitcoin's up this, it's up this. Well, yeah. What if you bought it at 60,000 when it dropped from 60 down to 20? Well, if I would have bought it at 5,000, well, yeah, woulda, shoulda, coulda, right? But let's look at AMD real quick, and then I got to wrap up because I just noticed we're only a minute or so left. But so yeah, well, and that's the fun part about technical analysis. There's a million different ways you can do it, and a million different things, tools you can use, and you really have to figure out what style of trading you do and what works for you. I don't do mean reversion trading. I've played with it a little bit. Yeah, I'm a patterns guy. I look for patterns. In fact, there's a pattern on AMD. Kind of, sort of, but not really. It's not technically a head and shoulders because it didn't come after a rally. But does it still indicate weakness? Yeah. Is it breaking that little trend line? Yeah. I think if it breaks this 130, there's not, you know, 100 is the next round. That's the round number. That's the spot you'd probably look for. Looks like something about 110. 110, 120 are kind of some midpoints. It doesn't look bullish, let's put it that way. So, of course, Jennifer, anytime. As you can tell, I love doing this. It's fun for me. So that's why I'm here. So, um, but yeah, it doesn't look, AMD does not look bullish at this point. Obviously, I mean, even longer term, well, this whole year, we're in a downtrend, lower highs, lower lows. Whoops. And again, it's all in context, right? If you go back to, you go back to July of 22, then we're still in a bullish trend. We got higher highs and higher, well, we have higher lows. We don't have higher highs. We have lower highs. So make sure you put it in context and, adapt it to the time frame that you're trading on. So that is obviously an important piece. So All right. Any other questions real quick? We'll wrap up. Holy cow. Actually, pretty much on time. That's rare for me. So, all right. Well, thanks for coming and hanging out and having some fun. Thank you, Brenda. You're welcome. Have a great weekend, everybody. And we'll see you next time. All right. See you later. God bless. Bye bye.